Welcome to the Transparent FX Academy. I'm Nick and I'm a top author and TradingView with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to go for high quality, free trading education. Now, without further ado, let's jump straight onto the chart. In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that at the moment, the market is testing a quite strong historical structure resistance level. In fact, from here, all this previous rejection to the downside was created. Again, here, the market tested its zone and started rejecting it to the downside. And we can see how just 3 months ago, the market once again tested its zone and started rejecting it to the downside. So from a monthly perspective, what we could expect is more potential bearish continuation away from this zone. We can also notice how we did have some minor previous monthly resistance turned support at this area. In fact, from here, this previous move to the downside was created. The market then broke above that zone and then went to retest it as support. And in fact, we did have a reaction to that zone with the creation of this green candle. However, at the same time, we can see how the market is now rejecting this level to the downside, trying to break below it. If that will be the case, we definitely could expect more potential bearish continuation, rejecting the monthly resistance that we have previously identified. Dropping down on the weekly time frame, what do we have? Now, from a weekly perspective, we can see how at the moment the market is testing the previous low. So there is the possibility to see some corrective movement to the upside away from this support. However, after that, we could expect more bearish continuation for the market to actually follow through with the rejection that we are expecting from a monthly perspective of that quite strong historical monthly resistance level, because as we will see later on, we're also getting massive institutional shorting, which has just started once again. Dropping down on the daily time frame, what do we have? Now, from a daily perspective, what we can notice is that during all this move to the downside, there is one candle not related to the move, which is exactly this green candle here. This shows that at this level, we have quite strong previous daily support, which now that the market has broken it to the downside, is turned resistance. Now, why do I say that? Because while the market was pushing to the downside so aggressively, anyway, the market did find support at this level with the creation of this green candle. After that, the market broke below the area. So all this previous support is now turned resistance here. So what we could expect here is a retest of this previous support and resistance. And then inside of this area, this is a quite interesting zone inside of which we could see that institutional shorting at that point, further increasing the probabilities of a potential rejection to the downside away from this area. We can also notice that if we follow the patterns of this market, we do have an impulse and currently the start of a correction. And in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the high to the low of the impulse leg. And this shows us how we have a perfect 0.618 Fibonacci retracement lining up exactly at this area, creating a confluence of resistance that further increases the probabilities of seeing institutional shorting inside of this zone, which at that point could push this price lower. Now, If we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market, and we check the data precisely for gold, we can see that with the last report, institutions have just started once again adding massive shorts and closing a lot of longs. We had 11,800 shorts added from an institutional perspective with the last report and 10,100 longs getting closed. Now this brought the net positions from 193.3k all the way down to 142k. So clearly institutions are now moving to the bearish side of gold, making it weaker and therefore increasing the probabilities of a potential rejection to the downside away from this level. Now, in a situation like this, how we could be approaching this potential reversal lower. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the upside, waiting for the market to shift from an intraday bullish market as we would have to an intraday bearish market. And if the market would shift from an intraday bullish to bearish market and provide to us one of our valid entries, at that point we could be looking for a potential move lower for the market to complete this impulse correction and impulse pattern to the downside. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the web market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here past the testimonials, you will see that at the moment there is a massive special promotion in which you have a huge discount on the upfront price of the mentorship program from $497 all the way down to only $97 one-time payment. And as an option, since I have partnered with the forex broker Blueberry Markets, if after you join the program, you open an account with them, you can get a full refund credited back into your trading account. And if you scroll lower, you will see that at the moment there is still time to join before the offer expires and everything goes back to normal. And directly from here, there is the button to join in order to gain automatically access with the email and password that you will create during the checkout process. So I really suggest that you go and check it out. The link is also in the description and I will see you in it. If you enjoyed the video, make sure to smash that like button and comment below. It really does support the creation of more free analysis, education, and updates for all of you. And I will see you in my next breakdown.